Digital Currency Initiative. Lisa just published groundbreaking research analyzing over 41 million stablecoin transactions. And the findings are kind of remarkable. We're talking about payments that already exceeded the G20's targets set for 2030, micropayments that didn't even exist before in cross-border rails, and what open networks means for the future of global payments. If you're evaluating stablecoins for global payments, this conversation brings you the data that you need. Well, hello, Lisa Nestor. Thank you for joining this podcast.
Hello. Nice to see you, Danelle.
You too. So you're the director of research at Stanford's Future of Digital Currency Initiative. Tell us what that means and what does your work focus on there? And how did you end up studying stablecoins and cross-border payments?
Sure. So the Stanford Future of Digital Currency Initiative, it's based out of the School of Engineering at Stanford. And the goal of the program is to foster research and collaboration on digital currencies, blockchain. I'll say, yeah, for my specific research, I kind of have like two guiding North Stars. One is that I like to do empirical research. I get excited about finding primary data. What just kind of inspires me and what I'm passionate about is doing, we'll say, end user focused data. So whether that's the individual or the household or the business, when I kind of looked at the academic literature that was out there, I felt that that was a gap, and that's something that I've kind of done in the past. And yeah, I like telling that story and kind of asking the questions about how does this impact like the person. That's kind of a very exciting thing for me. So that's what my research is at FDCI, and yeah, that's what we're doing.
So this isn't where you started your journey into crypto and blockchain. I mean, you have been in this space for a lot longer than many other folks that are probably out there. So most recently you were at AirTM and you did a lot of work with AirTM, which helped to support the work that we'll get into in terms of what you just published. But you started early days in this space.
Yeah, I did.
Tell us more.
Sure. So yes, I started working at the Stellar Development Foundation in 2016. And that itself was an exciting journey. Like, I'll take it back one step further, which is I started as a Peace Corps volunteer doing financial inclusion research and work, then got my MBA and kind of made a transition into fintech, which was exciting. And then through a professor at UCLA was introduced to our mutual friend, Jed McCaleb. And what was cool is that even in 2016, like the application of blockchain to my first job doing Peace Corps work was like very evident to me.
That's what I was going to ask you. It sounds like it kind of flows a lot from what you were doing there. You saw probably the challenges and then the opportunities.
Oh yeah. Yeah. And it absolutely was. And it's even kind of this loop where, I kind of have had the opportunity to see something innovative, and then I do research about it, and then I kind of do something else that's innovative, and then I got to do some research about it. So I've been kind of doing that cycle for a little while. I think in a very natural way, I decided I wanted to move up the stack and work at a company that was really implementing this technology, see it firsthand. So I did that at AirTM. I was a chief strategy officer and found myself reading lots of academic literature about stablecoins and how they were changing the world, and decided I just had to kind of start studying it again.
Yeah, that's so great. I mean, it's so much about what we live in and what we see and how we want to help to solve it. And that's so much of what your journey has been, which I've loved about the work that you've done. It sort of leads us into this groundbreaking study that you on stablecoin performance in the cross-border payments, where you analyzed over 41 million USDC transactions on AirTM's platform. So when you think about like the work that you did, it's so interesting to think about like your background and then leading up to this to this specific work, the things that you've done before. I mean, what a different world, right?
Oh yeah. Remember anchors?
I do. I do. I still talk about them every day.
Yeah, I know. But it was just like anchors were stable coins before stable coins. And it's really cool to see that, sometimes it takes a pot a little while to boil. And especially when it's about money or, payments infrastructure, these are such huge, huge things. And so it's very cool to see that these kind of ideas and concepts that we had from the early days that they've just manifested. And then now they're, taking off in a way that, maybe we always wanted, but I don't know, I was fully prepared to see.
And now it's just like common parlance. Everyone's just like, well, of course, that makes
Yeah.
sense. But it took us a long time. And we focused on stablecoins before stablecoins were a word, as we always like to
Yep.
say. But when you looked at the transactions, and as I mentioned, 41 million USDC transactions, like walk us through the study itself and what you were trying to answer looking at these transactions.
Sure. So I think my goal was to write something that would, well, I guess the first thing was it started with the question, right? I mean, I obviously from my
Bro, I'm just letting this play while I get my tab set up because my computer restarted and like blew all my tabs out. So
Yeah, yeah, take your time, bro. This is a good combo, though.
work at Stellar and from my work at AirTM, I knew that I knew what was happening, but nobody has had the opportunity to kind of like sit there and really measure it and kind of look at things, I will say like from an apple to apples comparison and just in a strong enough empirical way that you felt this wasn't just kind of like a one-off case that I'm able to describe. So there, was a desire to just say like, okay, I've seen stable coins, I've seen what they can do, but like, is there a way to really measure this at scale that feels meaningful, that it can be like a piece of evidence to put out there? And so as I was walking out the door of AirTM, I did have the, good thought to ask if I could have access to the to the data on my way out the door. And so that was kind of the useful start. And then again, as I said, like looking at the broader literature, what I wanted to do was, yeah, kind of like bridge the gap in a very simple way. And I felt like the way to do that was just to make very simple comparisons. We didn't need to do anything complex. It was just to say, okay, like let's just take the two kind of simplest things that matter with a payment, how much it costs and how fast it can be delivered, and see if we can measure this in like a really strong way and then find a comparison that makes sense. And so that was the goal. I mean, I had questions myself, so I wanted to answer it myself, but I also felt that it was a piece of evidence that would be useful for the industry in general, for, policymakers and central bankers to kind of be able to understand the the outcomes that stable coins were creating for end users. That was kind of like the real kind of golden nugget I was looking for, and to just like put that in language that was easy to understand.
Well, outcomes are always the things that sort of, in my opinion, should drive policy and should actually drive the change that we want to see. One of the things that we've been talking about for so long are these G20 2030 like cross-border payment targets. And it's something that you addressed in the work and that you were
Mhm.
really looking at. So what are those targets and why do they matter? Like why is it something that you focused on and that we should all really think about?
Sure. Yeah, that was kind of an interesting part of the journey as well. So, we knew that payments were broken, but as somebody who, at least in my earlier life, I wasn't focused on like the G20 and like stuff that's going on there. But clearly, the G20 also has known that payments are broken for a while, right? And so, basically, as the story goes, in 2019, they kind of had this, you know, grand acknowledgement that there was issues with payments and that the infrastructure that exists just like wasn't working, and so they kind of put a mandate that this was something they wanted to fix. That eventually landed with the Financial Stability Board and some kind of committees out of the BIS, who looked at the landscape, did lots of interviews with businesses in the space, and basically said, these are the four core areas where payments are broken, in terms of like cost, speed, access. There's a fourth one that I'm not thinking of at the moment, but, and, this is where the issues are. And we want to create this roadmap that is going to set targets for globally what payments infrastructure will look like in 2027 or 2030. And, certainly the G20 or the BIS or the FSB, like all these different acronyms, they're, it's not a single institution. It's not something that they can kind of like compel to happen. It's something that they have to kind of organize and I think set flagpoles around. And so that's really the purpose of this roadmap. And the specific things, like I said, in terms of speed, the target is that 75% of payments will be received within 1 hour, global payments, and that would be by 2027, and that 100% of payments would be received within 1 day. On the cost standpoint, they have a couple different types of transactions. So there's some categories.
All right, big dog, I'm ready.
Let's get it.
Well, I'm actually
you
going to
feeling,
start
bro?
off with I'm actually really good, man. You know, this week was a very good week. Can't complain, bro. I was sick the previous week, last week, so this week was my first full week back in health, and I'm very grateful for that. You know, being sick makes you realize how grateful you are for your health when you get healthy again.
Yeah, 100%, bro. I agree.
Having the flu is absolutely miserable.
Yeah, that shit sucks.
All right, well, let's get started in today's call. I don't really know off the top of my head what you had shared yesterday, if you're going to bring that to the table, but today I want to go over some documents from some of the largest organizations in the game. We got consulting firms, we got large institutions having made major announcements this week that I want to go over in regards to confirmation that they are for a fact going to be offering double-digit yields to their clients from an institutional standpoint on stablecoins and digital assets. And then just really breaking down the DeFi landscape on the XRPL for you guys, going over a potential scam and showing you guys how to avoid those types of scams, earning yield on your XRP. And then we'll eventually get into the conversation of Canton. There were some good announcements this week in regards to some new super validators that came onto Canton. So all in that in today's video breakdown we're going to dive into, and then Aqua, of course, when you want to sprinkle in whatever you have to share, whether it's at the beginning, throughout the breakdown that I have, or at the end, feel free to wiggle your way in there, bro. I
Sounds good, bro.
want to start off here, my G, with your post where you said XRPL's tiny TVL versus Ethereum's billions of dollars. Will XRP DeFi ever boom? Give me your take on that.
I think it's just a matter of time. A lot needs to get built, and seeing soil finance come out when it did a few weeks ago or a month ago now, and the first compliant DeFi protocol, I feel like there is mad liquidity coming to the XRPL. It's just a matter of time, and that's when we'll see the price of XRP really change as well.
I have a firm belief too. That's one of the reasons why I have never sold my XRP, because of the amount of XRP that just sits idle in cold storage wallets, whale wallets, and on centralized exchanges. If just, I don't know, honestly, dude, if even just $10 billion of that money came
I know.
into the DeFi ecosystem on the XRPL, we'd see a substantiating price appreciation on XRP.
100%, 100%, bro.
This is that platform that you were talking about, Soil, and it is the first fully regulated and compliant DeFi protocol on the XRPL. And I actually want to highlight something for you guys real fast. First, let's just get into the institutional announcements that came about this week. We saw on, or what was this? This was a couple days ago, excuse me, not this week, but still in March, so fresh comparatively speaking. But March 12th, 2026, iShares staked Ethereum Trust began trading on NASDAQ, which was BlackRock's first ETF to offer staking rewards. So this just goes to show that these institutions are 110% gaining traction and momentum and awareness on DeFi primitives and earning yield on their digital assets through these ETF offerings. And then we also had, this was the announcement this week in regards to institutional DeFi on the XRPL, March 19th. So this was just yesterday. XRP treasury firm Evernorth discloses $233 million of impairment on holdings in a SPAC filing. So, this just goes to show that, this is a huge influx into what's happening right now. in the DeFi ecosystem. So it says the company reported $233 million of digital assets impairment for 2025, reflecting the gap between purchase prices and lower market values. Evernorth plans to actively manage its XRP treasury using Ripple's RLUSD stablecoin. Then it says Evernorth Holdings, an XRP treasury company going public through a SPAC merger, disclosed in a new S4 filing that it and Pathfinder digital asset held about 473 million XRP as of the end of last year. The document also gives investors a clearer look at how the position was built. Evernorth said it used $214 million in cash to acquire 84 million XRP, which works out to about $2.54 per token for that portion of the XRP treasury. Now, this just goes to show how much money is about to be, again, allocated to earning yield on XRP, because that's exactly what this XRP treasury is dedicated towards, yield strategies. So I just wanted to show you guys the complexity of this, how it's very large amounts of money that are going to start to flood into the DeFi ecosystem on the XRPL as the ecosystem matures and as regulation matures as well. This was also a video clip from Ripple that came out on the 18th, so just 2 days ago. Individual representative Rahan, never mind, I'm not even going to try to butcher her name. She's from Grayscale, nonetheless, and she goes on to talk about having a diversified portfolio and specifically mentions having XRP in that portfolio. Take a second quick and just listen to this minute 48 video before I bring something to everybody's attention.
An ETF opens the door to entirely new groups of investors and is going to continue to drive forward the ecosystem. Hi, I'm Xrpl. I lead product and research at Grayscale. Grayscale is the world's largest crypto-native asset manager. XRP is a battle-tested blockchain. It's been around for a long time. I think these assets have different kind of use cases and exposure that's right for different kinds of investors. That's why we created the Grayscale crypto sectors, which is a taxonomy that divides the crypto ecosystem into 6 sectors based on investable exposure and use case. XRP is an important part of the currency sector. We've been doing this a long time. We were the first to take Bitcoin and put it in a financial product. We were the first to challenge the incumbent regulatory infrastructure to bring crypto ETFs to market. So we have been engaging with regulators to help move forward this industry for a long time, and we plan to keep doing that. As investors wrap their head around Bitcoin, as they start thinking about smart contracts like Ethereum, they are starting to think beyond that, and they're thinking about how they diversify amongst the other 50% or so of the crypto market cap that's not Bitcoin. To me, the on-chain economy represents the growing set of applications, assets, and activity that operate natively on blockchains instead of in traditional infrastructure. Practically speaking, that means economic value that's recorded, transacted, and verified on blockchain networks. A potential XRP ETF opens the door to entirely new groups of investors. Now we have people asking how to allocate. We have crypto ETFs. We have a president on 60 Minutes talking about Bitcoin and crypto. This is just the beginning.
So I thought that was a pretty bullish statement there. She talks about how these large institutions are, through ETFs, looking past just Bitcoin and Ethereum. And I think that that's only going to continue to develop. And this announcement from Figment from March 12th just goes to show that these institutions are, for a fact, interested in earning yield on their digital assets. So the Evernorth announcement just yesterday, the little tiny segment from Grayscale, there's a lot going on in this space. We talked about regulated DeFi on the XRPL. Aqua made a real quick video breakdown showing you guys how you can go. As a matter of fact, Aqua, can you pull up the DeFi TVL on DeFi Llama real quick on the XRPL so we can actually show the people?
Yeah, absolutely.
Because what I want to show you guys is how to really pay attention to scams that exist out there. So red flag warning. All right. There is a platform that is going around out there, blocklender.io. This did not meet any of the threshold requirements for us to deploy our XRP on. This, in my personal opinion, is 110% a scam. The reason why I'm bringing it to everybody's attention is because there is a lot of ongoing happenings right now in regards to people talking about earning yield on XRP. These are the things, as a long-term XRP holder, you need to be very, at least I know I am. I've been holding XRP for 10 years now, since 2016. You do not want to put your hard-earned XRP into platforms like this just to find out that it's a scam and get rugged. So taking a look at this, first off, right off the bat, you can scroll right down to the bottom of their website and it says built on the XRP ledger. Now, this platform you cannot find on DeFi Llama whatsoever. And if you could, it says right here, total XRP lent out $1.07 billion. Okay. When Aqua shows you guys how much TVL is on the DeFi ecosystem right now on XRP, it's less than $60 million. So this is a flat out red flag for anybody that actually understands how to look at DeFi metrics. This is a scam. This is a lie. They're offering 12% APR. To get started, you have to put in credentials like your email and all that stuff. This is Web3. This is DeFi. You shouldn't have to give anybody your credentials unless it's a regulated platform that requires KYC, which this platform, again, talks about regulatory compliance here, fully regulated with regulatory standards to protect users and maintain platform integrity. Okay, you don't have to KYC to use this platform, which is another red flag. If they were regulatory compliant, you would have to KYC, you would have to send in credentials, you would have to get verified. There's none of that involved in this platform. There's so many red flags. They don't have any social media. You can't find out who's behind the product. You can't there's no announcements, right? There's no, breaking. Blocklender.io just released 12% yield on XRP on CoinDesk, on Cointelegraph, or any major news article platform. It's ghost. What I have seen, however, on the internet is a bunch of social media influencers trying to get people to sign up with this affiliation link down at the bottom, because I'm assuming they get a piece of the pie of any deposits that get put on this platform via the scammers that are running and operating this platform behind the scenes. So just make sure that if you are going to participate in DeFi on the XRPL, you're paying attention and staying up to date with the DeFi developments that Ripple announces, that XRPL Commons announces, that come out on the actual verified LinkedIn profile of Ripple or XRPL Commons or Ripple X, and you're not falling for these scams and these traps. Okay, we are in the age of misinformation. We are in the era of people being greedy because they want more money and they're blinded by these numbers. They see regulated platform, they see 12% APR, and you got all the moon boys out there manipulating people into thinking that XRP's price is going to go to $1,000. It doesn't. What does that do? It makes people even more money hungry because they were promised some substantial price appreciation on XRP and it's not happening. Now they're down on their position and they want to earn yield to make some of their money back. They put their money into this platform and then it gets rug pulled. Don't be that type of person. Do your due diligence. That's why in the CyberX Wealth 28 Club community, we have private Zoom calls throughout the week and we go over platforms like this. One of our community members brought it to our attention. We went over it, highlighted it as a red flag, had our cybersecurity analyst do a run on the actual website, came out as a red flag, all red flags across the board. So just be cognizant, be aware out there, and be mindful of these things. Aqua, if you want to add to the stage, the DeFi TVL on DeFi Llama, real quick.
Yeah, I'm sharing it right now if you want to pull it up.
Mind you, again, this platform that I just showed you said that there's $1.7 billion lent out on the platform. And you can clearly see, Aqua's pulled it up, there's only $49 million of TVL locked on the XRPL. And on DeFi Llama, you can see, where that TVL is coming from.
And that whatever that platform was called again, it's not here on DeFi Llama at all. So another red flag. I mean, it's not necessarily a complete red flag if it's not on DeFi Llama, but in this situation, it is a red flag. So yeah.
Well, good stuff. Good stuff. All right. Well, moving on, I want to continue down the rabbit hole with this ideology behind institutional interest. And I want to now roll over to showing you guys how these institutions are for a fact not only confirming their interest in the digital asset space by increasing their allocation in the coming months/years ahead and confirming that in recent reports, but also making major announcements. So we're going to now go over this EY and Coinbase March 2026 Institutional Investor Digital Asset Survey. I want to read some highlights from this, which is going to take us into a panel discussion where a gentleman from a large investment firm goes on to talk about institutional interest in DeFi, and then take a look at some documents from other major consulting firms and large banks that just came out this week. So starting off here, this is from EY and Coinbase, titled Volatility Drives Discipline, Not Retreat. The 2026 Institutional Investor Digital Asset Survey from March 2026. And I'm just going to thoroughly go through and read some of my highlights. It talks about all the investors and individuals surveyed in this report. Let me just make sure that my highlights are still on here. I hope so. Maybe they got deleted. That sucks. All right, well then we'll go through and we'll read some of it real quick. All right, so you can see here the survey dates were from January 13th through January 30th. So relatively recent, and they surveyed 352 institutional investors. Okay. And very interesting things, to say the least. And I'm just going to again go through and try to read some of my highlights. It says 74% of respondents expect crypto prices to rise over the next 12 months, with nearly 60% viewing crypto as a top 3 opportunity to generate attractive risk-adjusted returns. Okay, again, and this is coming from 352 surveyed institutional investors. Here it says, thinking about the next 3 years, in which asset classes do you see the biggest opportunities? Private equity came in at number 1, cryptocurrencies came in number 2, and U.S. equities came in number 3 spot, right? So crypto sitting there at number 2. Let's continue to see. More than 3/4 respond to believe market structure is the most important area in need of regulatory clarity. I wish it didn't delete my highlights. That's weird that it did. Here it is right here. It says 73% of respondents intend to increase their digital asset allocation in 2026, driven by greater regulatory clarity, expanded availability of regulated products, and improved infrastructure. Okay, so that was just another net little tiny bullish segment from this. All right, so here's another one. It says 86% of respondents already use or express interest in stablecoins, and they are increasingly interested in using them for internal cash management and money movement. This is important when we go over to the announcement from SBI. Okay, this is where another one was important. It says 56% of respondents expect to engage with DeFi protocols in some way by 2028. 13% are already engaging, and 43% plan to, with primary use cases being lending and derivatives. So that was just another extremely bullish thing from this event, or from this survey, because it just goes on to confirm, considering that we're in this downturn in the market sentiment, that these institutions surveyed this year are actually optimistic about the future trajectory of the crypto and DeFi ecosystem. All right. Let's see what else. Among those interested in tokenized assets, 11% are already invested, and 62% plan to invest by 2027. 61% expect tokenization to have a significant impact on market structure. All right, and that's pretty much it. So outside of all the little tiny nitty-gritty details, this report, from an institutional standpoint, just goes on to give statistics on how these institutions are, in a nutshell, net bullish on crypto, and they're not skeptical and bearish. It's just that right now we're in a risk-off market environment. That leads me over here to this gentleman on this BitGo panel discussion that he was on from the iConnections Miami 2026, and he just goes on to talk about how institutions are interested in, they're starting to engage in DeFi. Take a second here and listen.
Starting to see a lot of not only all these milestones. Perhaps I'll add another one that is happening right now. It's unfolding right now, and it might be one of the most important, that we're starting to see a lot of not only centralized crypto businesses, but also traditional finance businesses starting to engage a little more with decentralized finance. We're starting to see the emergence of things like decentralized vaults as maybe an ETF 2.0 wrapper because it provides a bunch of advantages over maybe the current ETF structure. You're starting to see probably the largest private credit fund in the world engage with a decentralized credit platform called Morpho. Starting to see the largest asset manager in the world engaging with Uniswap, which is the largest decentralized exchange. So I think I can see kind of the arc here going from ETFs and then stable coins now probably reaching escape velocity. And I feel like there is another very exciting new direction that we're taking here that involves tokenized securities, tokenized assets, and all these interesting DeFi primitives. So I feel like the industry is engaging with DeFi in a way that it hasn't in a while. That's a trend that is unfolding right now.
And he is absolutely right for saying that. So, taking your attention over here to two recent documents. This document from BCG, again, one of the major top four consulting firms. This is from March 2026. So, it is recent, titled Stable Yields on Stablecoins: How Yield Farming is Shaping Up as the Next Wave of Institutional DeFi. Shout out to the CyberX researchers. So these are the types of documents that we read thoroughly through inside the private community, keeping our community members in the loop and ahead of the game as to what institutions are paying attention to. And this document here goes hand in hand with this huge announcement from March 18th, 2026 from SBI Holdings. So coming over here to X, I'm going to read some snippets of these two documents here. The document from BCG and from SBI, where I said here in this post, this is massive. Banks are starting to quietly confirm what DeFi users have known for years. SBI announced USDC lending at 10% annually as a licensed financial institution in Japan. Let that sink in. Traditional banks are now using stablecoins, offering yield products, and competing with DeFi returns, and they're doing it within regulatory frameworks. Even more important, they're openly admitting typical FX deposit yields are around 0.01% to 4%, while USDC lending can offer 5 to 10% plus. That's not experimentation, that is acknowledgement that the system is evolving towards tokenized dollars, on-chain yield, and blockchain-based lending rails. This isn't if anymore, it is happening. DeFi didn't just disrupt finance. It set the new benchmark, and now banks are racing to catch up. If you guys remember last year and in the previous year in 2024, me and Aqua were screaming, we are going to see banks offer double-digit yields on stablecoins. And when this next massive bull run happens, we are going to be able to retire off the yield that we're earning on just stablecoins, right? And taking a look at this. So first, the BCG document here, okay? This is what they said in their document. It says, decentralized finance or DeFi offers a range of ways to earn yield on crypto assets, including stablecoins. Yield farming is the practice of deploying assets into various DeFi protocols to generate returns. In summary, stablecoin holders' demand for yield is being met by the decentralized market. This is a major catalyst for the next wave of DeFi adoption, a period where an influx of stablecoin capital seeking yields could dramatically expand DeFi usage and bring institutional participants into the ecosystem at scale. We see this trend, this is again BCG, we see this trend already taking place by institutional consortiums of stablecoins. There are 12 major banks in Europe, such as BBVA, RBI, BNB Paribas, and UniCredit, DZ Bank, and DECA, etc., already participating in these things. And then we come over here to the announcement from SBI, all right? Here's the official announcement from the SBI Holdings website, and it says, President and CEO Tomohiko Kondo, hereinafter referred to as the company, a consolidated subsidiary of SBI Holdings, the chairman and president and CEO that operates a cryptocurrency exchange business, is pleased to announce that it will launch the USDC lending service on March 19th, 2026, becoming the first licensed company in Japan to do so. USDC lending is a service in which customers can lend USDC, an electronic payment method, stablecoin, linked to the price of US dollars. To commemorate the launch, the initial offering will be a 12-week term with an annual interest rate of 10%. And even under normal circumstances, it is planned to be offered at a high annual interest rate of approximately 5% for a 12-week term, which is higher than typical US dollar foreign currency time deposits. Then down here at the bottom, it says the Japanese yen to US dollar and the general yield is around 0.01% to 4% per annum. On the other hand, USDC lending can provide a more consistently high annual interest rate. So you literally have a regulated institution promoting double-digit yields here, y'all. This is huge confirmation.
Yeah. And it's low key. Let me just share my screen. It's actually low key happening right now. So this is the Enosis DEX. We've shared this Enosis DEX plenty of times. We hold some of the protocol assets themselves as well, right? But this is they got a slew of different products. They got pools and farms, right? But to highlight on their most recent ad is borrowing and lending. And as you guys can see here, you can lend out your FXRP and get 13.71%. Lending it out right now.
Screen? You went to a different screen?
Oh, yeah, I did. My bad. I didn't. Can you see it now? Yeah. So yeah, you can basically lend out your FXRP or you can lend out your Wrap Flare. Wrap Flare is given 22% right now. And I feel like both of these TVLs are pretty healthy as well, right? The Wrap Flare has 500,000 and this FXRP is 6 million, right? And you can borrow against this as well. Now, I don't know how aligned these guys are with, being compliant and regulated, but this is actually the best borrowing and lending APR I've seen for XRP, hands down, since coming across DeFi and just always talking DeFi. I think, I don't I don't know of another position that has been double-digit yields like this as well. So this is exciting to see, and this just got rolled out just recently. I just seen the post from Enosis right before we got on this call. So yeah, good
stuff, bro. I mean, it's coming into fruition. We've been screaming at the top of our lungs. If you all don't know how to get your digital assets working for you, it's your first time in DeFi, you've been sitting sidelines for some time because you've been waiting on regulatory clarity. I feel like the announcement from SBI just recently that you can earn double-digit yield on your stable coins, and the fact that we highlighted a platform that's regulated on the Xrpl where you can earn 8% on your RLUSD, right? There's no reason not to be earning yield on at least your idle cash. Maybe you're not ready. Go ahead.
No, go ahead. I'll share right after.
I was going to say, maybe you're not ready to earn yield on your actual digital assets, but if you just have cash sitting in a bank account right now doing absolutely nothing for you, you could still at least put that to work on regulated platforms right now in the moment.
Yeah. And peep this as well. So this was an update from Soil. Let's see here. Let me just share my screen one more time here. So Soil, we've been over this, platform for going on 2-3 weeks now. I've shared my RLUSD positions that I've been testing out, but this is a brand new announcement that was just announced this week, and that's the XRP Vault is launching soon. So soon you'll be able to earn yield on your native XRP without leaving the XRPL ecosystem. And again, Soil Finance is a compliant protocol. So this is going to be the very first time that you can get your XRP actually working for you in a compliant fashion. So more to come on this.
You don't have to wrap it or anything?
No, it's the native XRP without going the what is it?
Flare route, the flare
route, wrapping and all that shit, minting and vaulting and all that bullshit. Yeah, this is just native XRP straight from your Zamin wallet, as a matter of fact, too, because this is you connect your Zamin wallet to the Soil platform. But I'm excited for this, to be honest with you. I'm really excited.
Does it mention how much yield we're going to be offered yet or no?
No, not yet. But I mean, even if it's around 8 or 5%, I'm stoked on that. Like,
dude, if they could just give us 3.5% on XRP, I'd be happy with how much XRP I have, bro. Like,
yeah, facts, bro.
I've had hundreds of thousands of dollars sitting in XRP for like 10 years. You know, if I could have just been earning 3% on that this entire time, I'd be chilling right now.
Yeah, you're
So
about to
I
get it
will
working for you soon, bro.
110% be allocating a couple grand to this platform to test it out in the coming days ahead when they launch it for sure. All right, let's roll over. I want to start to go over and talk and discuss briefly about this announcement via a new validator on Canton real quick, but I have some video clips that I want to play for you guys before we dive into that real fast. So, this gentleman here, I posted a video clip showing his credentials real quick. Let me just pull that up so I don't get this man's name mixed up. His name's Alex, and I just don't forget real quick where he stems from. Let me pull it up real fast. Okay, here it is. So Alex, he is the CPO at Swissborg. Swissborg is a regulated Swiss-based cryptocurrency wealth management platform. And I want you guys to just take a second and listen to what he says here about how there's still generational opportunities in crypto.
Everyone is talking about economic cycles, about business cycles or monetary cycles. But one thing that people are missing out is the tech cycle and the industrial revolutions. And what happens in these tech cycles is you have 3 core stages, everyone. And this is very important that you understand why your portfolio is lagging and when you will eventually make money. Because tech cycles are broken down into 3 core categories. Number 1 is the innovation cycle. And even when you had electricity, even when you have steam engines, even when you have steel, even when you have the .com, there's always a lag. And it starts with innovation, which creates bubbles. Those bubbles burst, crazy valuations, 90% go to zero, 50% within the .com bubble went to zero in the first 5 years, and then only 3 to 5% were the Amazons and Googles and literally the assets that made you crazy, crazy wealth, right? The second stage is the growth stage. Right now in crypto, we're in the growth stage. If we compare with the .com era, we're roughly in 2002 in terms of total users. And 2002 was actually after the bubble bursted. So we had 2 bubbles that bursted to the equivalent of 1 bubble in .com. So right now, guys, there's going to be a lag. Unfortunately, it will still take time for the total market capitalization of crypto to recover. However, you can find asymmetrical bets and projects that will make you a lot of money based on some of the formula Vinit was mentioning, though he missed one really important component, which is it's not just sustainable business model, it's not just activity, but it's constant innovation. Those are the 3 ingredients that really help create the Googles of tomorrow, the Microsoft of tomorrow, the NASDAQ, the New York Stock Exchange of tomorrow. And so as we go through these growth stages, then eventually we'll reach the maturity stages, which you mentioned just earlier, but we're still not at the maturity stages. It still takes a time, it still takes a lag, but if you guys are dollar cost averaging in the right assets that have the right formula, once again, generational wealth will be created.
Yeah, bro. You know, and that's coming from a regulated entity.
Dang, what's his title? Like, do you know?
He's the CPO, the chief something officer of this company, Swissborg.
Okay, yeah, he's got some credentials then. That's amazing to hear. That's amazing to hear.
He's not just some random dude talking about generational wealth, and he's also talking about, mind you, again, this panel is from like a couple days ago. He's talking about dollar cost averaging in at these prices, you know, which goes back to the documents that I shared with you guys a second ago. None of these institutions or, you know, large asset managers or hedge funds or family offices are worried right now about price. They understand the backdrop. They understand the market sentiment. We obviously, of course, have had a hawkish Federal Reserve. We've had higher inflation. We've had resilient labor market figures, pushback on rate cut prospects and liquidity cycles. We've obviously, of course, had, you know, the Iran tensions and the flare-up between Israel, Iran, and the United States create more demand for safe haven assets. Particularly right now, U.S. dollar demand is higher than usual, so on and so forth. And these things, they don't really support increased allocation to risk assets, but the underlying infrastructure in crypto right now is stronger than it's ever been. The regulatory environment is more firm than it has ever been. It's not fully there yet, as this guy mentioned. We're not in the maturity phase yet, but we're in the growth phase. That is where you want to be getting into these projects. You want to be finding those blue chip winners, the ones that are building, the ones that are, you know, innovating, the ones that are actually solving problems and providing real world utility. So that way, when we come out of this risk off backdrop and these institutions actually flood in at scale, you know, Again, generational wealth, not financial advice, sits for those who pay attention to detail and are dollar cost averaging into the right projects. Not financial advice, one of those projects that I fully believe is going to be one of those winners alongside many other layer ones is the Canton network. So with that being said, real fast, I just want to take you over here to this Liquidity 2026 video where this gentleman on stage goes on to talk about how, over the next couple of years, the world needs utility. It does not need just another layer one. Most layer ones will be redundant over the next couple of years. And the layer ones that actually provide real world value to TradFi players that are going to adopt these blockchains are going to be the ones that survive. Take a second here and just listen to what he says.
Tell me how this works, and now people want to see show me how this works. Like, it's definitely nobody, the world doesn't need another L1. What we need is proper utility. And look, the market structure bill has the concept of a mature blockchain, capital M, capital B. So if you're the SEC, are you going to give authorization for a company to issue a tokenized financial instrument on a brand new L1? Like, I think the answer is candidly no. And so what we're going to see, I think, a convergence around some of the very well established and heavily understood and broadly accepted L1s, and we're going to see, I think we'll see a sort of real, selection process go on. So I would imagine that we see a lot of L1s become redundant over the next kind of 5 years.
Yep, that makes sense. I think for me, we've definitely achieved that crypto is here to stay aspect, and the second part is stable coins have become a lot more commonly used, and it's become more transparent than Swift system in its operation, which is incredible, much faster, more transparent. I think I'm most excited about the tokenization, because I think in the tokenization has the aspect of completely swallowing up the traditional finance and into crypto, and that means everything that is in traditional finance will be replicated in the crypto space over those tokenized assets, and that's very
Everything in the traditional financial space will be replicated over into the crypto ecosystem. And he talked about, the gentleman previous, that the utility layer of the crypto ecosystem will be what survives. It's not just going to be some random layer one that banks don't need. And so, with that being said, I want you guys to come over here. I found another interesting connection. If you guys have been tracking and paying attention to some of the connections I've been making to Ripple and Canton, which I have not seen any other influencer on the internet do, I've now found 3, and this one marks the 4th one with this company here, Nova, unifying traditional and digital assets into a single operating layer. This company right here, if we come over to their website, you can see it says unifying your assets, supercharge your transactions, and right down at the bottom, you can see integrated with leading ecosystem partners, and Ripple is one of those partners right down there. Coinbase, Polygon, Avalanche, so on and so forth, Wisdom Tree, the names go on. And this is not just some random organization. Nova, just a month ago, was featured in the Celent Industry Report as a leading technology provider for the tokenized money ecosystem alongside veteran organizations like Xrpl, Ripple, Coinbase, Fireblocks, and Fiserv. The biggest lesson emerging across the industry is tokenization and how it's not just a asset innovative trend. It's an infrastructure transformation. Then if we come over here to another article that was released just a month ago, it says, we're excited, Nova, to announce our global strategic collaboration with Amazon Web Services to help institutions build and scale digital asset strategies alongside their existing traditional systems. As traditional and digital assets converge, institutions face fragmented infrastructure and long implementation cycles. Nova solves this by unifying traditional and tokenized assets into a single operating layer that runs natively within a client's environment, providing one consistent tech stack to represent, move, and control assets across the enterprise. Together with Amazon Web Services, We are helping institutions move from experimentation to production by collapsing the time to market from years to months while preserving full control, compliance, and flexibility as strategies evolve. So, this is not just some random company. Then, if we come to more recent times, Hellborn, who we also know has some partnerships with Ripple. Hellborn is excited to partner with Nova as the trusted cybersecurity partner for the Nova ecosystem. That was announced last week. And then, as of just yesterday, we come over here. I stopped sharing my screen. Give me a sec. This was the announcement from Hellborn. Hellborn is excited to partner with Nova as the trusted cybersecurity partner for the Nova ecosystem. And then here, this was announced just yesterday. Nova is excited to share that we have officially joined the Canton network and will support financial institutions looking to scale tokenization efforts on the protocol. Canton provides the privacy, permissioning, and interoperability required for regulated markets. Nova provides the operational infrastructure that allows institutions to integrate tokenized assets without rebuilding or rip and replacing their internal systems. The real friction emerges when institutions attempt to integrate tokenized assets into their existing operational stack. Bridging these environments often becomes the most difficult part of adoption. Through Nova, institutions can streamline onboarding and usability of Canton. Our platform acts as the operational infrastructure layer that allows institutions to abstract away the technical complexity of interacting with Canton infrastructure while still maintaining visibility with their existing systems and workflows. Their validator is now live, and if their institution is evaluating a Canton strategy, they'd love to hear from them. Then, if we come over here to the Medium announcement, and it says through Nova, institutions with this Canton partnership can now abstract away the underlying technical complexity of Canton, streamline institutional onboarding into the network, embed programmability and compliance and business logic directly into transaction flows, maintain real time operational visibility across all asset movements, and reduce integration timelines that historically take months into the deployment cycles measured in weeks. And if we remember a month ago, what they announced with Amazon, right? It's the same exact verbiage. They're helping institutions move from experimentation to production. So this just goes to show another another validator on Canton, taking steps towards integrating traditional finance into, layer ones that are going to be, in my personal opinion, again, not financial advice, the ones that survive in the long term. So that was just a really great article to wrap up my spiel for today. Aqua, I'll leave the floor open, bro. If you have anything else you want to bring to the people, the floor is yours, my man.
Yeah, I'll just highlight what was it this past Tuesday. Let me share my screen. Marshall Hayner was at Harvard. So it was titled Securing Digital Government, AI, Blockchain, and the Infrastructure of Trust, which happened Tuesday, March 17th. And you guys can see here, Marshall Hayner did the welcoming opening remarks, and then he was one of the main panelists. But what I'd really like to point out is that you have a moderator here that's a national policy reporter at CNN. So yeah, we might be seeing Metallicus potentially in the mainstream. And, after last week, seeing Arena sit down with the Senator Loomis, I mean, these guys are really, really tapped into some really important people. And to speak at Harvard, I feel like is just, it speaks for itself, in my opinion. So, yeah, I can't wait to see what ends up happening in the mainstream, because in this moment, I feel like they're tucking Metallicus. And I guess we'll see how long they're going to keep it tucked. But yeah,
I want
that's what I wanted to say.
I want to highlight to everybody too that this was a invitation only conversation at Harvard. Like, it wasn't just some like you can go and apply to it. You had to be invited to this conversation. And Marshall Hayner was the only one of the fintechs and blockchain organizations out there that got invited to go speak at this event.
Yeah.
Which I completely agree with, bro. I think that they have done their due diligence to hide the fact that Metallicus is helping revolutionize the credit union industry to keep them, tapped into this new digital era of finance.
Yeah. Yeah, 100%, bro.
You know, the
And
fact that
yeah,
the loan protocol is the only BSA compliant DeFi protocol in the world has not garnished enough attention. Honest to God, at this point, anybody that is operating in DeFi that is not or does not have some exposure to the loan protocol is operating on a non BSA compliant DeFi protocol and therefore taking unnecessary risk.
yeah. And you definitely risk potentially outside of that ecosystem if you're participating in other ecosystems. Once regulations pass, you could potentially, go through like a freeze of your assets until that protocol gets aligned, gets compliant, and then your assets could be potentially unfrozen at that moment. But it's high risk to be operating in a non-compliant ecosystem in this very moment and where we're at in the timeline of everything. So
Don't they also have some form of like SOC compliance as well? Yeah. What is it? Is it SOC 2? I know your
yeah,
daughter's in the background.
yeah, she's wilding right now. It's SOC2, but yeah, and that they mentioned in the quarter 3 report last year. I'm going to speak real quick here. They mentioned in the quarter 3 report last year that by the first half of 2026, they will become SOC-2 compliant. But to touch on that topic, right? It's funny you ask, is because Usmar, one of the main CyberX researchers, had sent some documents on XPR network and the whole ecosystem from years ago. And in that set of documents that he sent, there was the one of the quarterly reports, but from 2022, and it mentioned that they were working on SOC2 compliance. So SOC2 compliance is not something that just was, being worked on since last year. It's been going on since 2022, and for it to finally get to completion in 2026, I mean, it's been a 4-year process. So, yeah, I just want to highlight that. It's not something that you can do overnight.
Yeah, 110%, bro. All right, well, let's let you get to your family, my man. This was a great Friday call. We had a freaking phenomenal week inside the CyberX community. Honestly, bro, maybe 2 on Fridays after the end of our DeFi spiel and research. We can try to start incorporating some like back testing, and we back test all the price action for the week for anybody of our listeners that is interested in the trading aspect of what we offer too. Especially now considering that all of the mentors in CyberX have shown the ability to pass funded challenges, which is just so insane to see that we are probably the only community on the face of the internet that has 4, 5 to 7 figures mentors actively managing capital in the trading and investing environment right now.
Yeah, it was meant to be, bro. It's wild that all of us, every single one of us.
It's even crazier too, bro. Like I went and I looked in my folder just over the last 2 weeks. We've had 10 members pass funded challenges. 3 have taken profits and gotten payouts over the last, what's today, March 20th? So over the last 20 days. That's 1 member every other day.
I mean, it just speaks to what you learn on the inside, and having that edge. We definitely have an edge in our community, without a doubt.
So we'll definitely start incorporating that. But as always, blessings to you guys. Make sure that you all are tapped into real communities out there, digesting real good information and not the speculative hype. Honestly, there comes a point in time in your career where you kind of look past the speculative nature of this ecosystem and you really want to start to learn how to make money. When you awaken to that, you awaken to your own personal ability in this space to just make money and not wait around to make money. You are a powerful individual that has the intellectual capabilities to really truly learn about these markets in detail. And in CyberX, we provide that edge in so many different ways for you to take that approach. So we love to have you on the team. Many blessings to you guys. Be cognizant, be out there. Everybody enjoy your weekend. Take a load off. We had a really volatile week this past week, and I'm sure that the volatility is going to continue on to next week as we wrap up March. Blessings to you guys. Everybody take it easy. We do appreciate the love and the support. Anybody that's interested in joining our private community, you guys can always head over to cyprextrading.com. We would love to have you on the team. With that being said, everybody take it easy. Aqua, I'll talk to you later, Brumban.
Yeah, I'll talk to you soon, brother. Much love to everybody. And yeah, have a good weekend.
Love and light.
Peace. Much